Y ya doy broadcast, todavía no empezó. Ok. Me veo en YouTube, pero puedo.
Sí, dale broadcast cuando quieras y ya.
And I go mute on YouTube or no?
No.
No, okay. Okay, perfect. So, perfect. All right, thank you very much for joining. We'll be starting in a couple of minutes. Thank you very much for joining. We'll be starting momentarily. Wonderful. So thank you very much for joining another Into the Block webinar where we discuss the latest trends in crypto markets. I'm Jesus Rodriguez, current CEO and co-founder of Into the Block. We try to host these webinars every 3 weeks or so to try to discuss some of the hottest topics in the crypto space. So a couple of logistics things before we start. If you have any questions during the webinar, feel free to use the Q&A. Paul, we're actively monitoring it. And we're going to I'm gonna try to stop a couple of times and take questions. And the next webinar will be announced at the very end. So today it's a very simple webinar. So we're gonna just give you a quick market update and try to discuss some of the hottest topics that you're seeing in the news, but try to do that from a data-centric perspective instead of from a subjective matter. So what exactly are we going to talk about? So we're going to discuss Bitcoin, of course, right? So just give you a quick update about what's happening with Bitcoin. Where do we see price and activity? The recent growth of Ethereum, we're going to try to take a data-centric perspective of that. The rise of ChainLink, which has been impressive, right? And is still holding. And we're going to talk about DeFi. Right, like why not? Everybody's going crazy about it. Some people are very vocal calling it a bubble. So we're gonna give you some very unique indicators about DeFi. And speaking about DeFi, I want to take the last portion of the analytics to talk about Ampleforth, which is a token that has captured the imagination of many traders and speculators in the space, and many people are calling it a Ponzi scheme, but certainly has seen a ton of growth. And I want to show you a couple of data points about that particular asset. Before we start, though, I want to give you a quick update about Into the Block, which is something that we typically don't do in these webinars. But the thing is that we have grown so fast, so quickly, that it's just hard to keep up with all the stuff that is happening in the company. You're constantly seeing new customer integrations and new features being launched. So I wanted to take 30 seconds just to show you a couple of things that has happened recently. Since the last webinar, we have done quite a bit. A couple of notable additions to the product are our prediction models. So if you go Into the Block today, you see a new tab just dedicated to predictive models for Bitcoin, Ethereum, Bitcoin Cash, and Litecoin. 8 models in production as at the moment. And when I say model, I mean deep neural networks that are using over 120 parameters to predict the price of one of these assets. The accuracy has been very good. Today, we're not having exactly a great day, but in general, we have been very, very accurate over the last few weeks. And these are a simpler version of models that we're actually using in trading strategies. So we're constantly retraining and validating these models. It's not something that we put out there and forget about it. Yesterday, we launched a new feature, also very heavy on the machine learning side, that tries to monitor flows moving in and out of exchanges at the blockchain level. We think it's pretty accurate. We worked on this for a long time and didn't release it because we were not happy with the accuracy until recently. But these indicators are a very strong measure of liquidity, of risk for different exchanges. And you're gonna see, I'm gonna use some of those today in the analysis, so you can see how you can interpret those. And those are live for Bitcoin, Ethereum, and over 500 ERC20 tokens, and very soon Bitcoin Cash and Litecoin. About customers, that we don't disclose number of customers, but very soon you might see an announcement, because we're approaching one of those round numbers that people like to celebrate. So about customers that have gone live recently, well, blockchain.com. If you go to a blockchain.com explorer, that is one of the top explorers in the market, you're going to see into the block analytics, very heavy on the blockchain side, as well as the price pages. So in the blockchain.com price pages, there is a segment dedicated to into the block analytics. And our very good customers of bitcoin.com, that a few months ago, they launched into the block analytics in their markets pages and in their explorer. About 2 weeks ago, they did a release for their wallet that, is one of the most popular wallets in the market, over 10 million downloads, and they created a very nice experience using into the block analytics. This is sort of how it looks like. It's very mobile friendly. It's awesome, and a lot of customers are using. Like, we're seeing a ton of people coming from bitcoin.com using this type of integration. So we're super happy with that, and that's all you're gonna hear about a company update. But I thought it's a nice segment just to give you a quick data point about the things that are happening with us, if you're not reading our Medium channels and things like that all the time. So let's start with the market update. So first things first, like what's going on with Bitcoin. So what are the things that people are questioning, are asking themselves recently? So a lot of movement in DeFi. Is that affecting Bitcoin? Are people taking money out of Bitcoin and going to DeFi? What's happening with volatility? We went from weeks of no movement to a lot of activity to the recent few days. This has been so-so. And what's up with the 12,000 barrier? Like, are we gonna get past 12,000 like we did, or is it a very strong level of resistance? These are some of the questions that you typically read in the news almost every day about different theses of the market. So about the 12,000, not very trivial. So this is the into the block, in and out of the money around the current price analysis that tries to provide a very objective view of profitability of wallets that are making money or losing money, that can effectively act as levels of support and resistance. So you see this big red bubble here. This is telling us that there is almost 2 million Bitcoin addresses that bought between 11,400 and 11,700. So this is a very strong level of resistance that Bitcoin has. If the price keeps going up, it's gonna face this level of resistance, and it has to clear that. So possible, but not exactly trivial to clear. And on the flip side, there is not a whole lot of support around 11,000, and this is objective support. So these are real people, real wallets holding funds. This is not us extrapolating information from a price chart, right? So this is based on groups of addresses that are holding Bitcoin at those levels. There is only about 600,000 addresses between 11,000 and 11,300. So it is conceivably that the price will drop even below that. So that's something to keep an eye on. By the way, I'm gonna go super fast with the market update. It's data points over data points. So let's keep going. So another one of the questions that we typically here is that there is a lot of money going into DeFi. Where is that money coming? And many people speculate that is coming from Bitcoin. And we cannot assess that factually, but there is something that is factual, is the fact that money is being retired from top exchanges. So this is the into the block net flow indicator, the one that I show you we launched yesterday, and you can see aggregated from most of the top exchanges. The net flows are being negative. Net flows are the difference between money coming in, money going out. So you're seeing that in the last few days, there is a tendency on the negative, on the net flow, which means money is being retired from exchanges. It could be to cash out. It could be that is going somewhere else. So the interesting thing about exchanges is that the activity in tier one exchanges, so let's say large volume exchanges, is very, very similar. This is the into the block total flow analysis that shows inflow plus outflow. It gives you an idea of activity, how much money is coming in and out at any given time. And look at the patterns on Coinbase, Binance, Bitstamp, and Kraken. They move symmetrically, so they're very similar. Obviously, there's some spikes here and there, some deviations here and there, but they look very, very similar. So when money is moving into one of these exchanges, is also you can spot similar trends on the others, and they haven't really changed so much over time. So that's quite interesting. But what is even more interesting is the fact that those funds, we're seeing a concentration of funds in larger exchanges. Let's not say tier one, that's probably not the right term, but compare Binance and Coinbase on one side with Bitfinex, which is a very good exchange, but certainly doesn't manage the same type of volume that Binance and Coinbase. Look here, a few months ago at the beginning, right during the March crash, you can see that the flows move very similar between Binance and Coinbase and Bitfinex, but look at the trends recently. So the funds are being concentrated in this type of large exchanges, and smaller exchanges like Bitfinex, Poloniex, and so on and so forth. They're seeing a decrease in the volumes, in the funds moving in and out. So look how this line trends towards the bottom. So that's a trend that I think is important to keep an eye on. Is there is a lot of money being used in Bitcoin these days in exchanges, moving in and out of exchanges, but there is a heavy concentration on the tier one exchanges. And these are some of the key insights that we noticed about Bitcoin that try to address some of the market commentary that we have seen recently. Again, if you have any questions, feel free to use the chat. So let's switch to Ethereum real quick. So Ethereum has seen a ton of momentum in the last few months. Many people attribute that to DeFi. So how much is the real impact of DeFi on Ethereum? And this is the Ethereum thesis that as more applications are being built on top, the price should go up. Is it being proven right, or there's risk with the high price of gas and other things that level of activity is triggering? So one thing we noticed is that the activity in Ethereum is real. So it's not only price spike, so the number of active addresses has skyrocketed. So I always say that an address chart is one of the most misleading charts in crypto analytics, because exchanges create addresses on the fly all the time for doing all sorts of things. So it's very confusing. So this type of analysis tried to discriminate that and give you some meaningful semantics or contextual information around addresses. So for instance, addresses that are active and addresses that has zero balance, so that they don't matter. They're created for exchanges for doing some transfers and things like that, but they don't really participate in the network. So when you see this trend on the growth of addresses of Ethereum, this is real. These are addresses that are active. It's not only the number of addresses that is always growing. These are addresses that are actively participating in the network, and that number has been increasing. And short-term activity, so new addresses coming into the network that are actively trading, this is what we call the traders analysis. This is also at an all-time high. So this is important because every time there is a price rally, every time there is a lot of momentum in the market, this is a very strong indicator of that. New people getting excited about Ethereum, new people getting into DeFi via Ethereum and buying ETH before switching to a DeFi protocol. So this activity is real, despite of what you believe DeFi could be a bubble or not. That we're gonna discuss that in a second. But this level of activity is real, but also long-term holding on Ethereum is increasing. So it's not only the speculators. So long-term hold, look at this, it's at an all-time high. So people holding Ethereum over a year, that number is increasing. And that's also an indication that people are buying for the long term and not only for a speculation. Furthermore, the Ethereum activity in centralized exchanges, not DEXs, centralized exchanges, has also increased very high. So look at the total flows, the same indicator I showed you before for Ethereum, and look at the last 3 months, how it has been slowly, steadily increasing over time, which means people are buying ETH in these exchanges, and maybe you know, to get some exposure to DeFi, to get into DeFi in some other way. But the activity is real in centralized exchanges. And then one indicator that my team likes a lot, because it's a very strong signal of confidence in the market, is what we call the large transactions. So transactions that deviate from the norm, $100,000 or so, that are disproportionately large to the rest of the network. So when there is confidence in an asset, this indicator tends to go up. And the number of large transactions in Ethereum over the last 3 months has gone up. Look where we started in May, and look how it steadily trends up with some reversals, but it keeps trending up and up and up. And that means that people are putting real money, like large transactions in this network. It's not only a small transactions to do some speculation. There's real capital being moved in Ethereum these days. And finally, because you cannot get away from the price thing, Ethereum has seen a lot of momentum, but breaking 395 is going to require some work. Right, potential is going to come from the activity in DeFi. You can see huge resistance around almost 1 million addresses between 384 to 394. So that's an important indicator that probably we're going to be hovering around the 380s to the 390s for a few days. I hope that makes sense. I'm going to take a second to answer a couple of questions. Farhad is asking, what happened with the net flows, inflow outflows goes negative? That means that it's more money being taken out on a given day, which typically we're gonna look at it in ChainLink. Now typically means people are taking profits, right? People are when money is moving out, it's moving out to wallets, it's moving out to other vehicles, right? So they're taking profits and they're getting out of the exchange. Any given day could be more money being taken out than money coming in, but obviously as a long-term, it's a long-term sign of liquidity, right? In a given exchange. And then Manolo Garcia asks, do you have some analysis on the dollar devaluation versus euro impact on a stable coin? Actually, we have had some discussions about that, but we don't have an analysis into the blog platform. There is a lot of speculation of what's happening with all the money printing and what's impact that's going to have into store of value assets like Bitcoin or in the usage of stable coins. So the next in the next few minutes, I want to talk about ChainLink. So ChainLink is one of the assets that has received the most media coverage over the last few months. Fourth asset by market cap. Yesterday, it overtook Bitcoin Cash, and now they're back and forth. And many people, there was even a report that was published claiming that the whole thing was a Ponzi scheme. Very large report actually, and those people approach us, right, to sort of present their thesis, and we respectfully listen. We think there is a lot of merit in the project. and some of the data corroborates that, but obviously there are some people that are not fans of the project. But let's look at some real data, not speculate. So some of the questions that we typically hear recently is this a real long-term viable project or something that is a spur of the moment? We hear that the asset has grown, but how much? I mean, beyond the price and the market cap, how else is this manifesting itself? So one metric that is astonishing is that 77% of the people, the wallets that invested that are holding ChainLink positions are making money. So this is ridiculous, right? A few days ago was 100%. So, but the price has decreased quite a bit in the last few days, which means so anybody, 77% of the people who invested in Litecoin realized some sort of profit, which is also an indication of the health of the network at this time. The sentiment in social media around this thing is off the charts, right? Like we do a lot of, we train a series of machine learning models to natural language models to understand the language of crypto. And when you look at the Twitter feeds, look at this, right? It's disproportionately positive compared to the negative comments about ChainLink. And one thing that is also notable to understand is that given the strong momentum on ChainLink, investors started taking profit. So Farhad, this is your question from before. Look at this. So the flows are negative. There is more outflows in ChainLink than inflows for Binance, which means a lot of the people that hold positions, that held positions on ChainLink, are getting out of the exchange to probably take profits or go to a more passive storage. So that trend has been real for a few weeks. And it's now, if you want to see a chart that would really shock you, let's look at the active new addresses in ChainLink. So this is the traders chart. Remember, new addresses that are actively traded that came into a network. Look at this number. I mean, it has grown disproportionately compared to the normal trends over the last few months. So it was trending up or so, and it just skyrocketed in the last few months, in the last few weeks, which means a lot of people are getting into ChainLink and trading and investing with it and building applications on top of it. So I hope those are metrics that are really indicative of the behavior of ChainLink in the last few weeks. So let's talk about DeFi, and you're gonna hear from us in the next few webinars. In the next few weeks, you're gonna see a lot of analysis about DeFi and what's really happening in the space. Today, I'm gonna show you a preview of a few things that we have been working on, but that unfortunately are not in the platform yet. Obviously, there is a lot of hype and questions about this. What is the real impact of DeFi in crypto markets? We know there is a lot of hype, but is the impact real? And what are the opportunities? So many people, there is a claim that obviously this is not a sustainable trend, that there is a lot of speculation, and some of that is true. I think there is some merit to that. My personal opinion is not even the company opinion. I think from an analytical standpoint, from a market intelligence standpoint, it's really hard to claim that DeFi is a bubble yet for two reasons. There is bullish behavior, but it's very hard to say that something is a bubble when there is about 40 projects or something in the space, right? Like it's too small, right? It's too concentrated. The second thing, I mean, many people compare DeFi to the ICO bubble. The number of projects doesn't even compare, right? Like we're talking from tens of thousands to a few dozens. The other thing is that the projects are real. And whether you agree with them or not, they're working in production, delivering real value. So there's money being lended, there's things being traded. It's not a white papers raising capitals to build companies in the future. There's some of that, and there's going to be more. But at the moment, I think there is a lot of real IP in the space. And I think from the experimentational standpoint, it's fascinating, right? The fact that you can program investing behavior into these assets, which you cannot do in centralized exchanges and things like that. So it's too early to claim that it's a bubble or to call bloody murder or whatever. I think we should be open to innovation. Now, in a more subjective matter, I think one of my mentors used to say that the number one sign that something is not a bubble is when everybody is saying it's a bubble, because by definition, bubbles are something that you don't see coming. So I don't think we have that many clever people in this market to be making those claims. So every time that everybody claims that something is a bubble, it's probably a good idea to wait, to pause and wait and see what happened. But let's look at what the data said. So volumes in DeFi are super small. I mean, this is a pillow fight. I mean, it's not affecting anybody. Nobody's losing their savings in this thing. So this is an analysis of Uniswap. We're doing a ton of work going into the top 10 protocols and going very deep at the smart contract level and trying to extract intelligence. And you're going to see some of that in the platform. But look at the fees that are being paid on Uniswap for the DAI pool, the wrap ETH DAI pool. They're nothing. I mean, they're very, very tiny. Compared to what you see in centralized exchanges. And when you look at something like Link that I just showed you how it's killing it in terms of the market behavior, and you look at the behavior in the top DEX like Uniswap, look at this. There were a couple of spikes when the pool was starting, but look at this. I mean, we're talking about $76,000 or so. I mean, this is completely completely ridiculous. Even a token like Ampleforth, that we're going to look at it in more detail, that is driven, it's triggering a ton of speculation on arbitrage opportunities in the space at its peak, right? We were talking about 2 million volumes and a few $1,000s in fee. So very, very tiny to cause any impact in the long term. It's growing fast. There is a lot of innovation. That's very, very exciting. But in terms of volumes being moved compared to the rest of the crypto market is very tiny. Now, arbitrage opportunities exist. So something like Uniswap, and again, I'm concentrating on this because it's a market update, so we cannot cover that many protocols, and we have a ton of very unique analysis on Uniswap that doesn't exist anywhere else. And so for the other top protocols. So you can see this analysis looks at all the transactions when there are swaps. It's looking at the wrap Ethereum Ampleforth swap pool. So people swapping Ethereum by Ampleforth. And when there are large swaps like that, the pools can reach imbalance. And when the pools reach imbalance, there is an opportunity for arbitrage, and you're seeing many opportunities like that are constantly happening multiple times a day, and they're obviously bots and people doing arbitrage to rebalance the pool. So the idea is that when large swaps like this happen, liquidity needs to be injected somehow into the pool. While that doesn't happen, there is a huge window of arbitrage, and this is one pool in one exchange. The minute you start combining multiple pools, the minute you start combining multiple protocols, the minute you start combining DEXs and centralized exchanges, those opportunities grow exponentially, not linearly. So this is super interesting. And then for the more passive investors, the liquidity providers in Uniswap, they're making money. So you don't want to trade. You're not an active investor, but you want to serve as a liquidity provider in one of those things. And these are the fees that are being paid. And for the Ampleforth wrap Ethereum pool, so they're decent. And the magic of exchanges like Uniswap or Balancer is that you don't need a broker, right? There is no intermediate. The fees, if you're supplying liquidity to the exchange, you make the fees directly from the trading activity. And I think that's in the long term is a good thing with all the governance issues that introduces. But I think the concept has definitely a ton of merit. Speaking of DeFi, I want to take the last slide to cover a token that has captured the imagination of many people. And that's Ampleforth. So for the ones of you that don't know, Ampleforth is this semi-stable coin, right, that tries to keep a balance, a value around the US dollar in 2019. And every day there is a freebase, right, in which the circulating supply of the asset changes, and you could be holding, if you're holding 1% of Ampleforth one day with 10 tokens, you could be holding 1% of Ampleforth the next day, but with 10,000 tokens. So it changes. So many people, the team who created this is absolutely brilliant, ex-Facebook engineers, I think. Many people claim it's a Ponzi scheme. It's really hard to follow, but you're seeing a lot of activity in it on both sides, right? Detractors and fans. So one analysis that we did, that again is going into the platform soon, is this. So we look and say, well, what happens every day at 2 a.m. when those rebases is how it happens when the supply changes, because it creates huge arbitrage opportunities, right? And there are people awake at 2 a.m. every day waiting for those opportunities, and they do happen, right? So you can see how the changes. It's hard to read this chart because it's a huge chart, and I took 3 months. I should have taken less, but this is how the circulating supply changed from one value to another, and you can see the price impact after, but it's not immediate. That's what is fascinating, right? It's not that if the supply contracts, the price is going to skyrocket next hour. It takes time, and there is a lot of arbitrage behavior being baked into the performance of the asset. So this is fascinating to track. If you're interested on this, I would recommend an article, 2 articles actually, that my good friend Professor Stephen McKeon published last week about Ampleforth, a very detailed analysis. You can just Google it. It's absolutely brilliant, and I'm very detailed. And I wish I sent him this chart like 10 minutes after the hit published. But it's super cool and super detailed. So anyhow, so that's my summary for today. What have we seen? So crypto market is experiencing a decent momentum. It's not a bull market by any stretch, but we're moving. Ethereum is seeing a ton of growth, potentially influenced by DeFi. ChainLink has consolidated its position of one of the top crypto assets. The experimentation with DeFi is fascinating. Like it, hate it, but just pay attention to it, because intellectually I think is fascinating. And obviously there has been a ton of speculation around DeFi in recent months. This is what we have today. I would like to thank you very much. And because I changed the slides last minute, I don't have the slide about the next webinar, but it's going to be on the chat. The next webinar is amazing. It's about DeFi trading strategies. So we're going to talk about the DeFi ecosystem, and we're going to look at the top strategies that you can play within the space, whether it's arbitrage, multi-step arbitrage, prediction models, things that we're seeing, some as ideas and some as a more practical. Some more practical experience, and we're going to give you a lot of tips in terms of what we think works. How do you manage risk? What are the things that you need to consider? We have been doing a ton of work in this space, learning a lot and failing a lot. So I believe the link is in the chat. Go register. It's going to be awesome, and it's content that doesn't exist anywhere, and you're going to disagree with a lot of it, which is going to make for a very interesting discussion. So with that, I would like to open for questions. One of the questions is, do we support XRP? At the moment, we don't, but that's changing soon. So the reason we don't is there is a ton of issues with reconciling accounting in the XRP blockchain, and it's huge. But given that today we have more than blockchain, we have metrics for spot, social, derivative, right? We're going to incorporate it at some point, while we still work the mechanics of the underlying blockchain analysis, because the XRP blockchain is one, is huge, and two, is huge, like, you know, way bigger than Bitcoin, and two, is very complex to do the accounting, and sometimes a lot of the things don't reconcile. So a lot of our analysis could be misleading. So that's one of the things that we have been careful about. There's some questions about Patrick McDermott asked, could you talk about the Ethereum and consensus partnership? I'm pretty sure he's referring to the Quorum acquisition that happened yesterday. I mean, it's interesting. So the consensus is definitely one of the top venues for enterprise blockchain solutions. Quorum needed a new home, incubated in JP Morgan. JP Morgan is investing in consensus, so it just makes sense. It's probably going to be, it probably give the Quorum project a good future. But again, I'm not, we don't work with consensus, or we don't have any particular insights about this. That's just my perspective from a market standpoint. Nadia said, thank you, looking forward to the next webinar. Could you, Anonymous asked, could you write the name of the 2 articles of the suggested Ampleforth? Yes, look at the chat, I'm writing the name of the author. So just Google that Ampleforth and you will find it. Well, I think that's all we have for today. Do not miss the next webinar. It's going to be unique. It's going to be awesome. So thank you very much for joining. Happy to do this once again, and we're looking forward to seeing you in 3 weeks. Thank you very much.